What is your 2026 prediction?
Yeah, my 2026 prediction is that Oracle is going to do the first of its kind chipped backed asset backed security. I know that's a mouthful, but
Chip-backed, asset-backed security. Okay,
yes.
great. I think
So
that's a great place to end it. So,
no,
all right,
so
tell us what that means.
right. The asset-backed securities market is huge. It's a bit over 800 billion so far this year. And it's already been used to finance things like data centers. And so what I'm proposing is basically that Oracle will look to this market to be able to raise money against its existing chips so that it can buy more chips to do things like build data centers for OpenAI and, stay on track for this big cloud expansion that they're pushing.
And I just want to make sure I'm clear on this. So, I mean, look, the idea of Oracle owning chips and then taking out a loan that is collateralized by those chips, I get that part. In terms of what they would spend that money on, would they be spending that money on buying more chips, or would it be really building the data centers themselves?
Yeah, that would be the idea. The chips are really the most expensive part of any data center, well, any AI data center in the cloud. And so Oracle's done a pretty good job of getting others to build the physical shells of the data centers for them so far. And they've been able to defray the upfront costs of that in a few different ways. But what I think they're going to need to start doing next year is really thinking about how they're financing the actual chips that go in those data centers and how to bring down those costs. So that's where I see them turning to the ABS market.
Now, you started off by saying first of its kind. So no company has done anything like this before?
Right. No company has done anything like this in the sort of publicly traded asset-backed securities markets. CoreWeave, which pioneered this kind of AI cloud model broadly, has raised about $13 billion of debt backed by chips, but it did that by going to private investors in the kind of private credit market in a more bespoke deal. What I'm proposing here would be a much more sort of standardized asset-backed securities issuance that big insurance funds, big pension funds, risk-averse investors could get behind and then trade in and out of if they wanted to.
As a public security, essentially.
Essentially, yes.
Okay. Now, you also talked about a special purpose vehicle in this system that you described. What would be the purpose of an SPV here, other than being special, which is the point of a special purpose vehicle?
Yeah, well, it's a common tool in the ABS market, and basically, Oracle would put the chips that it's using as collateral in that special purpose vehicle, so they're basically locked in there, and lenders could have comfort that if everything went south, they would be able to then do something with those chips in the SPV. And it could also have the added benefit of keeping some of this off of Oracle's balance sheet, which is already looking a bit stretched. So it sort of serves that dual purpose.
And why is it that companies can do this? I mean, the idea of keeping debt off the balance sheet, that seems to make a lot of sense to me. But I'm struggling to understand why a company could just basically allocate all that risk to this third party entity, or something that doesn't beget any risk upon itself.
Well, it's a common tactic, and it's actually something that the banks have done a lot more since the financial crisis. So it's sort of taking that concept and applying it to the tech world, which frankly, up until this point, hasn't had to do anything like this. Google has grown a fairly big cloud business pretty quickly, and it was pretty unprofitable to begin with. And Google subsidized that with profits from the other part of its business. What's different now is basically that Oracle doesn't have that luxury. It's burning cash and it has to spend a lot of money to fulfill this commitment that it's made to OpenAI. So it is it's an interesting moment to see a tech company like Oracle that used to be very profitable now in a position where I think it should be considering something like this.
And what would be the risks with pursuing a strategy like this?
Yeah, well, the risks are basically that the chips, this has been a hot topic of debate, that the chips maybe don't last as long as Oracle and other cloud providers want them to. That instead of 5 or 6 years of useful life, it turns out maybe after 2 or 3 years, they're not as powerful or they're usurped by other chips. So that's one big risk. And then, ultimately, these will be backed by cloud customer contracts. That's kind of the key backstop here. And so, if all of a sudden Oracle got these huge customers canceling their cloud contracts, that would also be problematic for the ABS issuance.
And I'm just trying to sort of play this out. So if let's say if the chips do depreciate faster than people might think, then I guess what would happen here? The value of the collateral would basically it would shrink, right? It might be 60-70% what they thought it were, and then they'd basically have to find new ways to collateralize it. Is that the idea?
Probably not, but it would just be potentially harmful in the downside scenario if
Got it.
if they were to have to sort of seize the chips, and also could be harmful for the revenues flowing through that SPV that ultimately go to repay the investors in the ABS. If Nvidia, well, that's less likely, but let's say if OpenAI all of a sudden doesn't want to use these older Nvidia chips, maybe that harms the cash flows going to the investors. But there are ways to sort of solve for this. You can over collateralize it, and there are other sort of techniques you can use to make sure that those cash flows keep flowing.
Great. Miles, I want to pivot to another story that you published today about Brookfield. Brookfield is a giant asset management company. We haven't written too much about them here at the information. What did you find about their ambitions in the cloud market?
Yeah, it's interesting. They made this big announcement in November that they were going to acquire $100 billion of assets to power AI. So everything from land to energy to data centers. And there was a little notice part of that announcement where they actually said they were building a cloud company called Radiant, and that NVIDIA was investing in this Brookfield fund as part of that. And so, in this interview with Brookfield's head of AI infrastructure, I was able to basically learn that they're seeing Radiant as the sort of first cloud of choice for all of these data centers they're building around the globe: Sweden, France, Qatar. Um, Basically, Brookfield thinks that they can go in, install chips themselves, and build a business renting them out to companies, which is something that I haven't seen any of the other major private capital firms do so far.
So Brookfield basically is suggesting it could be another Oracle in terms of being a cloud provider or another AWS or something like that. I mean, that's the market they're competing in, right?
Yeah, exactly. And it sees a way in through this kind of sovereign AI niche, serving big governments, serving customers in Europe that need to store their data locally. Um, and that is something where their sort of government connections, famously, they have these tight government connections in Canada, in Europe. They're kind of leaning on that to try to build this business. And so I think you'll probably see that paying dividends over the next few years.
How much do you think about how their energy work could give them an advantage here? Because they do a lot of energy investing, they do a lot of infrastructure investing. I mean, I just think about the power that is needed for these data centers. Everyone can't stop talking about it. I mean, I'm sort of trying to think if you have a company that owns energy assets already, is there a way maybe to vertically integrate more of this, cloud operation and actually maybe even give you an advantage. I don't know, maybe insofar as price, does this come up as an
Yeah.
advantage in the people you talk to?
Yeah, well, it's interesting because we just saw Google pay almost $5 billion for a company called Intersect Power, that basically creates microgrids for data centers that connect renewable energy to battery storage. I could definitely see Brookfield doing something similar. They have Westinghouse, which is making nuclear facilities. They have a ton of wind, a ton of solar. They also have this deal with a company called Bloom Energy, which is doing fuel cells that they're planning to hook up to data centers. I think Brookfield having all of this sort of under one roof, it's just one phone call away. If you need a hookup for a new data center in Europe, or you're struggling to get connected to the grid somewhere else, it's just that much easier.
Let me ask you one more question. You had this conversation with the global head of AI infrastructure. Outside of this news, I always like to ask people, what stands out to them from the conversation on a human level. Did anything surprise you, about this interview that you had? It's so rare that we get to sit down with folks like this.
Yeah, it was interesting. I think it was interesting to me how sort of forthright he was about basically this idea that they're going to cut out the middleman. He said basically, we're not is interested in working with 5 different partners in 5 different markets. And that's what a lot of these data center players have had to do. They've had to go and talk to CoreWeave and talk to Microsoft and talk to Nebius and talk to all these other cloud players and try to play them off each other to get the best terms for these data centers they're building. And Brookfield doesn't have to do that now. So I thought it was sort of interesting how he kind of came out and said that. And I think the other interesting thing was that he went out of his way to basically say, we're not doing any of this speculatively. We're not buying chips and hoping that they will come. We are only buying chips when we see customer demand. And I think he was clearly thinking about this sort of broader discussion about the AI bubble and the role that big investment firms like Brookfield are playing in it. So that was also interesting to me.
Well, look, I think that a discussion on asset-backed securities, chip-backed debt, and asset management companies getting into the cloud market, I couldn't think of a more fitting way to end off what has been a pretty insane year for the AI sector. Miles, happy New Year to you. Thank you so much for coming on, and we'll see you next year.